Hi there, and welcome to Churchill's first webinar. My name is Ashley Mayer. I'm the head of lettings at Churchill's Estate Agents, and today I'm going to be talking to you about why you should be investing in the York property market in 2022. So in order to answer this, one of the first things we really need to do is look at what's been happening with property prices over the last couple of years, as that will give us some kind of indication as what we might be looking to expect in the coming years. So what I'm going to show you now is what the average price of a property was in York 2 years ago compared to how it was today. I should add this information, this data is taken from the Land Registry House Price Index, which is one of the most accurate data sets for measuring and ascertaining what property prices were in a certain area at a certain point in time. So as you can see, in York, in January 2020, the average price of a property was £256,247. I've also broken down the property types below, i.e. detached, semi-detached, terraced houses and apartments. Fast forward 2 years, and the now average property price in York now stands at £304,846. So as you can see, there's an uplift in property values on average in York by 18.97%. So what this means is property values in York on average have nearly increased by nearly a fifth of their original value, which is some amazing capital growth. You may be wondering at this stage what's driving the York property market. I mean, other than effectively the access links into and out of York, you've got York is rich with and vibrant with history, so great fantastic for tourism, as well as holiday lets, which seems to be a predominant part of the York property market at this stage. So in my last slide, you may be thinking, well, great, that's all good and well, Ash, but property prices have increased in the whole of the UK. So why is York any different? So I felt imprudent at this stage to share with you what's been happening in around Yorkshire, other areas around Yorkshire, specifically Doncaster, Leeds, Harrogate and East Riding of Yorkshire. All have seen capital growth, admittedly, over the last 2 years. But what you can see above is that York has continued to outperform these areas, some areas rather significantly, I might add. So in this slide, I show the number of properties advertised per month in York over the last 2 years. What you'll do is you start to notice around sort of July time, there's an influx of properties, which coincidentally, this is around the time when the stamp duty holiday was announced, meaning buyers could save thousands upon thousands of pounds. So what you'll see again, there's a continuing surge of properties towards the end of the year. And ultimately, I would expect this is down to be homeowners upsizing and downsizing to save on tax where possible. But also, you'd have some savvy landlords who are seeing the impact this could achieve on the sales price of their properties and hence sort of consolidating their portfolios accordingly. Over time, fewer and fewer properties have come to the market, meaning a decrease in supply or for a static or even growing demand for quality homes. So as it stands, that would be a big determinant due to demand and supply economics as to why properties have continued to rise in the Greater York area. I thought it'd be quite interesting to share with you the selling times of properties in York. So how quickly properties come to market, how quickly they're from between offer to completion, offer being accepted, that is, to completion. So what you'll see invariably, flats take the longest given, and that would be down to the complexity and leasehold issues. As expected, semi-detached properties sell marginally quicker than mid-terraced houses, which I would expect to be symptomatic of issues from neighbouring properties, for instance, with terraced houses, so damp between walls and whatnot, as an example. So you may be interested in finding out what's been going on in the York rental market. Well, let's take a look. So this next slide shows average monthly rents in York in January 2022, split by property type, i.e. detached, semi-detached, mid-terrace and flats and apartments. This information, this data is taken from the Rightmove Let Agreed data, so it's fairly accurate for the Greater York area. And then the next slide, I'm going to show you how this compares to 2 years ago. And here you can see average rents in York split by property type as well as a whole from January 2020 to January 2022. So on average, this table shows that average rents in York have over the last 2 years have increased by 14.67%. Now, I know working in the letting sector in the Greater York area, there had been a shortfall of quality rental homes in York, which would lead again to a surge, given demand and supply economics in average rents. I wanted to share this slide with you as I found the information to be quite interesting. So this is a pie chart showing the profile of York properties let agreeing over the last 12 months. What we can infer from this is that flats and apartments in York tend to make up a predominant part of the York rental market. In fact, over half of properties are that let agreed over the last year were flats and apartments, closely followed by mid-terraced houses. The ones that let agreed the least were your bungalows, forming 2% of the rental sector in York. So I expect those to be perhaps your accidental landlords. So this next slide shows a graph of different tenures within of UK property since 1918 to 2008. What you'll see is at the time in 1918, housing stock was predominantly privately rented, and around the mid-50s, there was seemingly a change in attitudes to owning your own home, as well as social housing. Over these years, with increasing legislation, the Law and Property Act 1925, 1979 Protection from Eviction Act, private rentals were not seen as sound as investment as they are today. However, with the introduction of the 1988 Housing Act, and hence the birth of the assured short-hold tenancy, introduction of buy-to-let mortgages in the mid to late 90s, and just general changes in attitudes to renting, if you look at right at the end, the curve appears to be turning in favour of the private rental sector. So the graph in the last slide seems to indicate that we're moving towards a growing demand for good quality rental stock in the UK, let alone York. Moving on, I mentioned how earlier that York has heaps of fundamentals, one of which is its good commuter access links into and out of York. So I think it's worth pointing out at this point what the travel times from York railway station are. So this slide is actually an illustration showing travel times to and from York. I've picked out some of the areas which I felt that would be most appropriate given the level of commuter access for work purposes, namely London, Leeds, Manchester, Newcastle and Hull. You can see that there are quite a few trains travelling to and from to York each day, which will invariably have an impact on the level of demand to live within a certain area. And as you can see, York has fundamentals by way of lots of commuter trains for people to get to their homes, which will naturally impact the desire and demand to live within the area from owning a property or renting, as it were. So current fundamentals aside, it's worth noting what investment is expected in and around the York area in the future, which will naturally impact the levels of demand and desire to live within York, and consequently have an impact on property prices from a purchase or from a rental perspective. So the first thing I wanted to share with you is the Castle and Eye of York. Now this is a planning application recently submitted for public realm improvement works at the Castle and Eye of York to create a new high quality public space. Effectively, it's a proposal to transform the Castle car park into a new open space to meet and play with water features included, and create further activities and opportunities. The next is York Central, which is a large brownfield site to the west of the city's railway station. So the proposal is to develop and include up to 2,500 new homes and up to 112,000 square metres of office, leisure and retail use. Now this is expected to have a positive impact on the York economy, create new opportunities there as well, and then consequently have a positive impact on property prices as well. So in summary, why you should be looking to invest in the York property market in 2022. Well, property prices have increased by 18.97% on average over the last 2 years. York property prices have outperformed several areas around Yorkshire. The average rents in York have seen a 14.67% uplift on average over the last 2 years. As a side note, flats and apartments made up the majority, i.e. 56% of rental homes in York over the last 12 months, closely followed by terraced houses. There is seemingly a growing demand for quality rental stock in the UK, let alone York. As mentioned, York is rich with fundamentals, one of which is a strong commuter access links, which I mentioned earlier by way of the train links to various locations, namely London, Newcastle, Manchester, Hull, to name a few. There is also investment expected in the York area, which will further gentrify certain areas, which is expected to have a positive impact on property prices. So that is it for this first webinar. Thank you so much for listening in and watching. If you've got any queries on your property investment, by all means, please feel free to give me a call. My numbers and email address are there. If you're also looking, if you find a property that you're interested in, wanting to find a bit more information about it, what you might be able to rent it out for and so on, please feel free to contact me on those details. And I wish you all the very best for 2022 and happy investing.